Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 S&P 500 stocks with some of the highest growth potential. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. This week, the S&P 500 index has continued to make new all-time highs, hitting peak levels of $5,870 before cooling off a bit today. So I thought it'd be a great time to take a closer look at some of the S&P 500 holdings and which stocks Wall Street analysts think have the biggest upside potential from here. We did this by looking at the SPY S&P 500 ETF. Within the ETF page here, we can see a lot of details, including recent graphs, a breakdown of all the holdings within the SPY ETF, and also analyst forecasts. So that's ratings on all of the stocks held within the ETF. And down below, it shows us the stocks with the highest upside or highest downside potential. We're going to focus in on 3 of those stocks with the highest upside potential and also a strong buy consensus from Wall Street. We'll take a look at what those companies do, how the stock's been performing, and what those analysts are predicting for the stock's future. Just before we get into all of that, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app to access all your favorite investment research tools on the go by following the links in the description down below. Let's jump right into our 3 S&P 500 stocks. First on the list is a company called LKQ. They trade under the ticker LKQ, currently priced at $39.63. The stock is in the red overall this past year, down nearly 20%, and in the last 3 months has fallen 12%. Though recently we have seen some very positive crowd wisdom, with investors scooping up shares, as well as increased hedge fund activity and insider transactions. LKQ is a leading provider of alternative aftermarket auto parts to both repair and accessorize vehicles. They sell specialty salvage and recycled auto parts as well, and their products include remanufactured engines and transmissions, components, equipment, mirrors, and air filters. They have a pick your part program that allows customers to remove parts themselves, which helps LKQ pass on savings to customers. With operations across North America, Europe, and Taiwan, the company achieved their global expansion through approximately 270 acquisitions. LKQ does pay a quarterly dividend, and the latest was 30 cents per share for a dividend yield of 3.07%. And they'll be sharing their Q3 earnings report next week on October 24th. This does follow an earnings miss in their previous quarter, and in fact, LKQ has missed a couple quarter expectations this past year, causing some of that downward pressure on the stock. For their Q3, analysts are anticipating earnings per share of 88 cents, which would be a couple cents increase over last year's. This follows their Q2 back in July, where earnings per share came in at 98 cents, missing expectations by 5 cents per share. They saw revenue of $3.7 billion in that quarter, which was an 8% year-over-year increase, but that did miss estimates by $170 million. Their CEO did note that they believe current market headwinds are temporary in nature, but do expect them to persist for the balance of the year. But despite those headwinds, analysts do remain bullish on the stock. In September, we had an analyst from JP Morgan increase their price target. They said the company highlighted its renewed emphasis on operational excellence aimed at simplifying the business portfolio and operations. The firm says LKQ is now prioritizing shareholder returns and debt repayment, towards which it expects to allocate 60% of operating cash flow over the next couple of years. LKQ does have 6 current analyst ratings, coming in as a unanimous strong buy. And their average price target of $56.17 implies an upside potential of nearly 42% from current prices. Looking at those ratings down below, all of the price targets have a double-digit upside. Our low end is $50 here back in September for an upside of 26%, while we have a couple high-end price targets both at $60 for an upside of 51.5%. Our second S&P 500 stock with some big upside potential is News Corp. They trade under the ticker NWSA, currently priced at $26.48. Their stock has climbed 21.5% over this past year, and in the last 3 months has fallen a bit, down nearly 7%. News Corporation is a media and information company that distributes its content across a variety of industries. The American mass media and publishing company is home to some of the world's most trusted brands with over 200 years of history behind them. They're the result of a spin-off from media outlets with the original News Corporation and 21st Century Fox. They operate across digital real estate information, news media, book publishing, and cable television. Some of their notable assets include Dow Jones & Company, which is the publisher of the Wall Street Journal, News UK, publisher of The Sun and The Times, News Corp Australia, and REA Group, Group, operator of realestate.com, and book publisher HarperCollins. Back on August 8th, they did share their fourth quarter and full year report, where they beat expectations on both earnings and revenue. For their Q4, they reported earnings per share of 17 cents, coming in 1 cent ahead of expectations, and fourth quarter revenues were $2.58 billion, which grew over 6% year over year, beating by $80 million. For the whole year, the company reported revenue of $10.9 billion, which was a 2% increase to the prior year. Management said that fiscal 2024 was an outstanding year for the company, as they not only delivered robust earnings growth and created substantial shareholder value, but they took a significant step to prepare the company to prosper in the AI age. A few weeks ago in September, we had an analyst from Loop Capital bump up their price target on the stock. They said that the company is incorrectly valued like a traditional media stock despite having a very different business mix, though the management has been working on highlighting the underlying asset value. News Corp's majority-owned REA is also considering an offer on Rightmove, which should be accretive, adding that the firm is positive on the company's further leaning into digital real estate. News Corp does just have 3 current analyst ratings, but does come in as a unanimous strong buy. And the average price target comes in at $37 per share for an upside potential of 39.65%. Looking at those ratings down below, fairly tightly grouped together here, our low end is $35 for an upside of over 32%, while our high end is $39 for an upside of 47%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're looking at Schlumberger. They trade under the ticker SLB, currently priced at $43.53. This is another stock that is in the red this past year, losing about 25% over 1 year, and in the last 3 months falling 10%. Though we are seeing some positive indicators here with positive crowd wisdom and increased hedge fund activity. Schlumberger is an oilfield services company and is a big name in the industry. At the heart of things, they are an engineering firm, offering oil and gas exploration and production firms the skill and expertise they need in a wide range of areas, including drilling, hydraulic engineering, wastewater disposal, and pollutant control. These are all niche fields requiring highly specific technical knowledge, and Schlumberger brings them to the oil patch, both onshore and offshore. In addition to this, they're also working to bring new sectors of the energy industry to life with a strong stance in digital technology, and is also working on AI tech with an eye towards building autonomous operations in oil and gas fields. Schlumberger will be sharing their Q3 earnings report in just a few days on October 18th, and despite the stock being in the red this past year, Schlumberger does have a solid track record of earnings and revenue beats. For their third quarter, analysts are anticipating earnings per share of 90 cents, which would be a 12-cent increase over last year. For their second quarter, back in July, they reported earnings per share of 85 cents, which beat expectations by 2 cents per share. Revenue grew 5% sequentially and 13% year over year to $9.14 billion, beating expectations by $50 million. Now, we have recently seen several analysts lowering their price targets on the SLB stock while maintaining a buy rating. And they all largely reference the same thing, seeing some challenges ahead for 2025 in global oil demand and growth, some of them reducing the second half and 2025 outlooks across the industry. This one from BMO Capital here does say that they're positive on the company's higher EBITDA and free cash flow margin profile, driven by their technology and international leadership, while their shares trailed well below their historical valuation multiples and is in line to below historical premium relative to peers. But despite some lowered price targets, Schlumberger does still remain a strong buy based on 15 analyst ratings, with 14 buys and just 1 hold. And the average price target comes in above $65 per share, implying an upside potential of over 50% from current prices. Looking at those ratings down below, you can see those handful of analysts dropping their price targets, most by just a few dollars, $2 to $4 here. On the low end, we do have our hold rating at 49 for an upside of 12.5%, while our high-end price target comes in at $74 for an upside of about 70%. So that is a quick look at 3 stocks from the S&P 500 with some of the highest upside potential according to Wall Street. Let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.